When I hear a company's raising and it's on a safe, I always think, oh, can't it be a price round so we can take that markup?
Right,
Please, we need
You're
to
doing
show
well.
that.
Hello, everyone. Welcome back to the Data Minute Podcast. I'm your host, Peter Walker, Head of Insights here at Carta. Today, I was thrilled to be joined by Marie Drez, who's a venture capital CFO for Moxie Ventures and many other wonderful venture funds. Marie is a pretty special guest on this podcast because usually we talk to GPs about what's going on inside startups. Today, we talk to Marie about what's happening in the back end of all of these venture funds, which is an unexplored area for many emerging managers. So we covered a number of topics, a couple of the big ones. One, how to partner with your fund CFO, and of course, how to find the right fund CFO if you're an emerging manager. Two, questions to ask your auditor when you're establishing that relationship, and also some questions for your banking partner as well. We got into some lessons that Marie learned from the SVB demise of 2023. We talked about how fundraising from LPs has changed and the role that the CFO plays during those crucial fundraising moments. And of course, we ended by discussing what value, what strategic opportunities the role of the CFO brings when it's not buried in busy work. I loved this chat with Marie. Let's jump right in. Marie, thank you so much for coming. Really happy to have you here.
Thank you for having me.
Yeah, it's wonderful. You know, when we were talking off mic a little bit about the things that emerging managers ask us about running a venture fund, some of those Carta feels super confident in answering, but others of them I thought would feel much better coming from a seasoned CFO like yourself. So again, really appreciate you coming in.
Thank you.
So maybe we start at the beginning. Give us a little bit of a background on what does a fund CFO do day to day?
I would say that a fund CFO does everything that the GP doesn't do. So there's the investing side, which is what the GP does, and everything else a fund CFO does, or your fund admin, or a combination of both, especially if you're an emerging manager with not that big of a team.
Right.
So you would hire someone as a fund CFO or along those levels to take care of all those things, from hiring, budgets, regulatory, your LPA reporting. I mean, the list is so long, but I would say everything that the GP doesn't do outside of investing, the CFO does.
And do you find that most of the time the GP understands the role of the CFO when they get into venture, or is it kind of they're learning with you as you come into a new fund?
I think once they hire a CFO, they always say to me, oh, I should have done it sooner. I didn't realize there were all of these things that needed to be done.
Right.
But once your LPs, especially if you have some institutional LPs, ask you for all of this information, and then they're like, I'm going to hire someone, or can my fund admin do it? And maybe the fund admin doesn't have that ability to do.
Right.
Then they realize, okay, this is definitely outside of the scope of what I know to do.
And is there generally a level within the fund structure where it becomes useful to have a CFO in-house? I'm assuming, you work with many different venture funds, so most of that is outsourced CFO work. Is there a level where you're like, look, you're really big enough now that probably you should find someone that is actually in-house at the fund? I
definitely think that would be the case depending on how much AUM you have raised and if you have the management fees to afford a full-time CFO. And I think a lot of GPs would find it useful to have somebody on full-time, but you definitely need the budget for it. So maybe
it's really just a budget question of we're
think
managing enough money that this makes sense.
I think so.
Okay.
Because I think, on some of the funds that I work with, they have me look at some of the deal docs for investments.
Yep.
And that kind of saves them on the legal fees up front. Because if you've been doing it long enough, you can spot some of the things that matter to the GP when they're investing in a deal.
Gotcha.
So I think a full-time CFO is always valuable.
Absolutely. Yeah. I know that probably a lot of funds are listening or thinking about, maybe they're fund one going into fund two and they're saying, how do we afford an in-house CFO? I guess if you're having the question, maybe you're too small to be hiring one.
Yeah, for sure. Although I think if you start early on, if you can partner with your CFO before you raise a fund and say it's a fractional CFO, then you can work with your fund counsel to potentially maybe pass that cost on to the fund if it's allowed in the LPA. So you can work with the GP to structure it so that it is cost effective.
And that was one of the questions that we were going to get to, and maybe in a bit, is like, what kind of costs can you pass on to the fund versus taking on yourself? Is there a clear line, or is it a lot of judgment calls?
Oh, definitely no judgment calls.
Okay, good.
And you go back to your limited partnership agreement,
Yep.
and that pretty much outlines what you can and cannot build to the fund.
And are those wildly different depending on the fund, or are they pretty structured with a little bit of variation?
I think there's a lot of industry standards. So I would say not wildly variable.
Okay, good. And that's probably not a place where you want to innovate very much.
No, for sure.
That makes a lot of sense. Okay, so then beyond in-house and outsourced CFOs, some of the other things that you probably deal with day to day on valuations, audit, and tax. When we talk about Carta fund administration, these are three subjects that come up again and again and again. So maybe we take audit and tax, because that's sort of in the season that we're in right now. How do GPs go about picking their audit and tax team, or what kind of consideration should a GP or a manager have when they're kind of choosing how to run this kind of season?
You would definitely go back to your LPA to see what type of audit firm is mandated by the limited partnership agreement. It might require a Big Four. It may not. So I think you would start with that.
Yeah.
And then you would work with either your fund admin like Carta or your outsourced CFO, or I guess the GP themselves, to go out and interview a bunch of audit and tax firms and get the process going that way.
And when you're interviewing these people, what should you be asking them? Like, what are the things that you need out of an audit firm that would be different amongst the choices that you have?
Yeah. So one, fee.
Sure.
How much is it going to cost?
Absolutely.
Because some
Yep.
definitely charge way more than others.
Yep.
Availability. If you like how they run their valuation process and testing for the fund, can they meet the deadlines that are outlined in your LPA for when you need to issue audit and tax by? Do they have capacity for you?
Yep. How do you expect, valuation? You mentioned something about valuation policy and sort of the auditor's view on valuations. Especially in a moment like this, where a lot of valuations across venture are very stale, and it sort of does seem like a more amorphous space. How do you know, or what kind of questions can you ask an auditor to suss out whether or not they're sort of in alignment with the way you think about valuations?
You would ask the valuation team at the audit firm what their process is like, what documentation they need for valuations, if the valuation is stale, if it hasn't been an outside price round in more than a year, or is it 6 months, and what are they going to look, what inputs are they going to look for? Are they going to look for public comps? Are they going to look for financials of the company? Are they going to look at the 409A that the company has issued?
Yep.
I think, and how much of the GP discretion can influence that decision on valuations, because if the GP is on the board, they have more information than the auditor would have, that the company's doing great, it's meeting milestones, revenue, that kind of thing.
So, and then the GP discretion is always a factor in these things, but it sounds like some audit shops are more open to it, or is it just if the GP has materially more information than the auditors do, they tend to sort of accept the GP's judgment?
Definitely some audit firms value the GP opinion more than others. Some rely on more external, like a third-party valuation for some of the valuations. But I would say most want to work with the GP because they don't know the companies, they don't know the space. And so they do want to work with the GP to make sure it's within reason.
Yeah, because it's, I think at this moment, it can feel as though, when we look across, say, underlying portfolio assets and they're being held by multiple funds, the valuation marks being held by those different investors can be pretty significantly different. And when we've spoken to LPs about this, they say, yes, if we actually own an asset twice in two different funds, it basically comes down to a question of trust, of like, which of these managers do we trust the most in terms of the valuation that they're holding at. But I don't think that kind of trust, how much does that trust matter in the audit relationship? Or are they looking at trying to find as much hard data as they can?
I think that I think that auditors, if they have a portfolio company that they audit another fund in,
Yeah.
as your example, and you have two wildly different valuations, I think that they would go back to the GP
Okay.
and say, should we rethink this, how you're looking at it?
Gotcha. So they would proactively go back and say, like, we have some other, not reviewing any information, but we've new information has come to light. We should have another conversation.
I definitely think they would do that.
Okay.
So if you have a company at 100 million and then another firm is valuing it at 500 million,
Yeah.
I definitely think that they would probably go back to you and say,
yeah.
well, Peter, I think you're a little too optimistic on how the valuation of this company is.
I am an optimist, yes,
Okay.
at heart. So that's probably me. So what should be included in a fund's valuation policy in general?
That's something that's up to the GP. I think you need to work with your GP to see what they're looking for when they value a company. Is it meeting its milestones, cash runway, last round? Is there a round expected in the next 6 to 12 months? Do you think it's going to be an up round, a down round? Do they have revenue? Do they not have revenue?
Right.
But there's so many things you can put in there.
Yeah.
I think if you leave it, I don't want to say to leave it vague, but if you leave it a little bit vague, because if you have a policy, then your auditors are going to expect you to adhere to it.
Gotcha. But if your policy is a little bit more amorphous, then adherence is a bit more of a question.
Exactly.
Gotcha. That's great advice. And how do, I guess this question just occurred to me, but it seems like, one of the major inputs into these valuation policies is obviously last round, and then the time from the last round that's been happening. How do you as a CFO think about the explosion of safes and what they've done to sort of early stage valuation marks?
Well, safes you hold at cost.
Always
hold at cost.
Okay.
I have heard of one firm that is valuing their safe. If there was a subsequent safe with a increase in cap, that they could mark that up. But none of my auditors allow that. But they found someone that did. I don't know if we're allowed to say that, but here we go.
Here we are. We won't name names, but they're out there.
We won't name names. I on one hand, I think a lot of the GPs like the safes because they're super easy to do and they're quick to issue, not much legal costs involved with that. The founders seem to love the safes. I mean, YC came out with that idea and it's made it so wildly popular. So I think I'm neutral on it. How do you feel about the explosion of safes?
Well, I think that you're right to say that founders seem to love them for good reason. You can easy save time and save money. It's a pretty simple pitch. I am a little bit surprised that more emerging managers aren't trying to push price rounds just to have something firmer to fall back on. If, as you mentioned, if you raise on a safe and then raise on another safe, could be 36 months that mark is pretty stale. And that's probably a more difficult conversation with your LPs up the line than if you had said, hey, look, maybe even taking on a portion of that priced round in terms of the legal fees, et cetera. I'm kind of surprised that's not happening more often.
Yeah, I'm surprised as well. I don't know if they're waiting for a better environment before they raise a price round or they're afraid to raise a price round. I'm not really sure. I'm not sure either.
Yeah, it does. Safes do give you the sense of like infinite possibility, right? Anything can happen here. So maybe priced is putting a slightly more depressing actual mark on things. That could definitely be a part of it. But as you look towards some of the funds that you work with, I mean, no need to get into specifics here, but across Carta, at least, we've seen that emerging managers are having a much more difficult time raising. And it would seem as though firmer marks might actually help you make the case for yourself as an emerging manager.
Yes, I definitely think if you can show an increase in valuation in your portfolio, your current portfolio, that you would have a much easier time fundraising than not.
Yeah.
And without naming names, I know that some of the clients I work with are having a hard time with that, even though the companies have raised follow-on financings, but in the form of a safe with an increase in the cap of the safe, but they're not able to take that markup.
Right.
And so some of the feedback that the investors are giving them is, I'm not seeing much traction yet in your current portfolio for me to make that, to be convinced to invest in fund 2 for you.
Yeah.
So, and then when I hear a company's raising and it's on a safe, I always think, oh, can't it be a price round so we can take that markup?
Right,
Please, we need
You're
to
doing
show
well.
that.
Like, yeah, we want to
Yes.
like shout your success from the rooftops, right?
Definitely.
And it does help us like get to fund 2 or fund 3. So
Definitely.
that makes sense. Yeah, definitely. Now that we're on the idea of fundraising, what's the role of the CFO in a fundraise process in general?
I think the CFO helps with fundraising. It gives investors confidence that there's somebody there that is looking for all, checking the box for all of the things that a emerging manager is looking for.
Yeah.
Setting up the data room, answering the DDQs of your potential investors, marketing materials, working with the legal team to make sure that that the second LPA is in line with what the term sheet says, and subscription docs, a subscription document process, closings, fund modeling.
There's a whole host of things.
Things. Yes.
For sure. Definitely. Do you think that assurance is more appreciated by the institutional LPs than by certain, high net worth individual LPs?
I think some of the high net worth individual LPs are running the process like an institutional. They're hiring some third party valuation experts to help them with that process. So I feel like they're almost on equal levels, depending on the family office, of course. Right. So I would say yes, for sure.
And have you found that process is very, very different today than it was a couple of years ago, just in terms of like extra diligence, everything?
Yes. So it's dramatically changed.
What's the biggest change?
The questions are just crazy. I feel like the questions are crazy. I was on a 3-hour diligence call.
Wow.
During fundraising one time. And it really was just to check the box, and they had to ask the 300 questions.
Right.
And so it's definitely more scrutiny, more everything, more documentation, more questions about, and they really look at everything.
Yeah. Do you think that all of those 300 questions were worthwhile? i.e., was the fundraising process too easy in 2021 when there weren't enough questions being asked, and now is a good, healthy balance, or have kind of over-rotated?
That's a good question. Maybe a little bit of meet in the middle, because if you don't have anyone to help you with fundraising and you're a single GP with no help, that's a heavy lift. So I think it's hard for some emerging managers because of that. So could they have raised if they had help? Raise more, because you can only do so many in a day, right? And you're pitching all day, and then they open up the data room, and they say, hey, fill this out and upload all these documents, and and then that takes 3-4 hours. Well, then there's strapped for time.
Definitely.
So
And that's, I would imagine, a bigger crisis of time for solo GPs in particular. Are many of your funds solo GPs, or they have multiple GPs most of the time?
I have one with just a solo GP, and then the rest have at least 2 GPs. Is
your role different materially for the solo GP than the role you seem to play at the other funds?
No, I would say it's the same.
Okay.
Yeah, it's the same. I think I'm more for the solo GP. I'm more of a partner / sounding board for various things. Yeah. But I also play that role with my other GPs. So I feel very fortunate in that sense.
Well, they're fortunate to have you probably. So there you go.
Thank you.
Okay. So valuations, I've got 2 sort of separate threads in my hair. One is just maybe talking a little bit more about managing LPs and like best practices that you see for LP communication and management. What do the best funds do when it comes to keeping their LPs informed about how the fund is doing?
I think the best LPs probably have a internal investor relations person, but obviously communication is key. Transparency is key. Doing for some of your larger LPs, perhaps you do a quarterly call with them to give them an update on the firm and the portfolio and what's going on. Maybe you share deal flow. But definitely over communication is probably the best practice.
When do these funds typically actually get their first institutional LP? Do you have a sense of what that size is?
I think some get them first fund.
Right off the bat?
Yeah, right off the bat. I think it depends on who the manager is, who the emerging manager is.
And the kind of institution? Or is it mostly like over a certain level, if they're writing really, really big checks, like the difference between an endowment and a bank, for instance? Like, are those very different relationships or they come mostly to the same thing?
I've seen some banks write a $5-10 million check. So I don't think it matters.
It doesn't
in that
preclude
sense.
them.
No.
Okay. Interesting. Cool. Well, speaking of banks, one of the things that we wanted to touch on were about the banking crisis that we had. I think people have actually kind of memory hold SVB weekends. Like I know at Carta, that was a very stressful time.
Wait, what does that mean, memory hold weekend?
Just like tried to forget it
okay,
entirely.
Okay.
And like, actually, if you look at the core venture data, just startup fundraising, it doesn't really look like that. That was more of a blip than anything else. But I think it had actually a much more material impact on funds than it did on founders. So maybe what were some of the key lessons or learnings that you took from that crisis period in 2023?
Well, none of us ever thought SVB would go down the way it went down. They were the VC startup bank, hence Silicon Valley Bank, right? For years and years and years. I think for me, it's look at the balance sheet of those banks that you're banking with and have a banking relationship with. Doesn't mean that it couldn't happen again, but certainly, definitely just the health of the bank and maybe listen to some of the chatter, because I did hear some of the chatter pre about SVB pre-collapse, and I just didn't believe it. I said, no, there's no way SVB is gonna.
Right.
And then FRB happened shortly thereafter, and I didn't believe that one either. So.
Do you think that it behooves fund managers to just say, look, even though it might be extra hoops, we're just going to work with JP Morgan? And like, yeah, maybe they don't care necessarily about emerging fund managers as much, but at least I know my money's safe. I
think that you have some GPs who think that way, but I think you have others who are used to the white glove service of SVB and FRB and are not going that route.
Okay.
Or at least diversifying so that maybe they have some cash at like a JP Morgan, but then go to another regional bank.
Do you think that's a great strategy, that you should actually have some banking diversification, even at, a $10 million, $15 million fund?
I think it's a lot of work.
Is it just that the big banks are less interested in emerging managers and they just don't give you the time of day?
Definitely, they're less interested in emerging managers. I have heard that the threshold for some of them for venture clients is around $500 million.
Wow. Okay.
So that leaves room for another financial institution to capture that market.
Yep.
If you're an emerging manager, you won't get the level of service with a large financial institution the way you would with a smaller bank. And I'd like to think that that's all calm now. Mm-hmm. And some of that rockiness is gone from the regional banks. Now, I'm not an expert in that, so I can't really say. So, but typically venture doesn't keep much money.
Right.
You call capital, comes in, you make your investment, it goes out.
Right.
So we don't tend to keep a lot of cash on our balance sheets and in the bank account. So I think in some senses, maybe you don't need to have the big financial institution. Now, if you're a much larger VC, like a Sequoia, or you probably would. Yeah. But if you're an emerging manager, then... If
you're playing in billions of dollars of AUM, it's a different sort of story.
Yes.
Probably you get, you can go up the tiers of service there, even at a major bank.
Yes.
I don't think Mark Andreessen's having too much trouble.
No.
Yeah.
No.
On the question of capital calls, I get this question from emerging managers a lot, which is, should I just call capital twice a year, once a quarter, something like that? Or should I only call it directly in advance of me making an investment?
Most of the GPs will call it as you need to make an investment, and it's typically quarterly. You might schedule quarterly capital calls if you have a line of credit.
Yeah.
Like a lot of my funds do. We have some with Carta, which makes it super easy to draw down on the line of credit and report on. Then that definitely smooths out the cadence of the capital call. And I think that LPs appreciate that because they have they can budget in their own cash planning when you're going to call capital and about how much.
I'd imagine, especially now, LPs may be more concerned when they're going to get called for that capital. So being able to plan in advance is an advantage for you as a manager.
Yes. And some LPs ask that you give a capital call schedule for them, or at least a forecast for the next year so that they can put that in their own planning schedule.
Yeah, makes sense. Anything else that, for an emerging manager should know about evaluating potential banks? Is there like a list of questions, as you mentioned with the auditors, that you would be asking if you were establishing a new banking relationship?
Yes. I would ask about fees. I would ask if they would lend you money for a capital call line of credit or a management company line of credit. Maybe the GP himself or herself needs banking for themselves or a capital call for their GP commitment. So there's a lot of products out there that maybe some emerging managers don't know about that they could work with when picking a financial institution, credit cards,
right,
that type of thing.
Do you think that there are sort of banking-esque startups? I'm thinking of like Mercury and other places that are sort of intruding on some of that bank space with fund managers these days.
I haven't seen fund managers go to a Mercury yet, or a Brex. But I have seen definitely a lot of startups. I'm wiring to a Mercury or a Brex. And given what happened, I think with Mercury not too long ago, I do kind of question whether or not some of those founders are wooed by the newness or the modernness of
beautiful
those
UI.
And maybe they should look at alternatives, and I've tried to advise some of them on that. But so I haven't seen it encroach upon the venture space yet.
Gotcha. Yeah. All right. Now we've come to everyone's favorite topic, which I just can't seem to escape, which is how will AI change your job? So how is AI affecting the CFO role at a fund?
I'm waiting for that. I haven't seen it. I've seen it on the fund admin side.
Yes.
So I definitely think, and using Carta as an example, I don't know if it's true. You can correct me, but I think that maybe there's some AI in some of the processes that behind the scenes that Carta is doing for the funds that is fantastic. It makes our jobs a lot easier. I think that it will give us more time to do things that are more analytical or more useful for the GPs than doing the day-to-day things that might need to be done.
Right. Yeah. Just kind of automating the busy work so you can spend time on more strategic tasks.
Exactly.
But you don't think it's really kind of filtered into your daily life quite yet on the AI side?
It has not.
Have you seen it filter into your GP's daily life? Like, are they are using different AI tools to automate their work?
I'm seeing, yes. So I'm seeing them, all of them use Chat GPT in one way or another. Some AI for deal flow, monitoring deal flow and tracking deal flow and logging our deal logs. And so I am seeing it. It's super interesting. Yeah, definitely.
We, at Carta have been, as you mentioned, inserting it where it makes sense, but sort of playing around with it a ton behind the scenes. And there are some use cases that seem very obvious, like writing, that, it's good for, and it maybe makes a difference. And then there are others that seem maybe less obvious, but can automate entire sections of busy work that our teams are like kind of really excited about. So
that's great.
Yeah. It's coming in drips and drabs, but I think it's like coming for all of us, basically.
For sure.
Yeah.
It's a little scary, but I think also you have to validate the data that they're producing. And so it's not there yet. It's not there quite yet. You would still have to review everything
Absolutely.
before.
Yeah. You don't want to trust too much and then get caught out in a serious
Right.
mistake.
So I don't think everyone's saying, is AI going to get rid of accountants? And I don't think that's going to happen.
Yeah. Not in the near future.
No, not in the near
Yes.
future.
Emerging managers still need CFOs.
Yes.
I would put it that way. Yeah,
Okay.
exactly. Actually, the idea of like automating a process brings up a question, again, that's very topical because of the downturn in venture, which is just the information being shared from an individual company up to the fund. So one, are there information rights that you think are absolutely must-haves for any venture deal these days? And then two, do you find your GPs are having trouble, even though they have rights to that information, getting that info out of the portfolio companies?
I think the basic information rights would be financials from the portfolio company. A board deck would be great, but that doesn't always happen.
Yep.
But definitely I see financials, audited financials, maybe not even audited, but at least quarterly and annual financials from the portfolio company. Yes, hard to get sometimes from the portfolio companies, for sure.
Is that just is that because it's actually difficult to transmit that information? Or do you think the startup is a startup, so there are 100 fires and it's kind of tough to aggregate it? Like, what do you think is causing the friction of transmitting that information more regularly?
I think that some startups have so many investors on their cap table. And when you have hundreds of investors asking for the same information, that maybe you haven't streamlined it to where it goes out to everybody at the same time.
Yep.
I kind of think that's a lot of it. I could be wrong because I'm not on the portfolio company side of things,
right.
But I kind of think if there was a way that hello, Carta, don't you have that function for a startup?
We're building a lot in portfolio insights and the transmission of information. But when we talk to GPs, some of it, I feel like some of it is almost cultural. It's as though the founders are worried a little bit about, what will they do with this information? Am I going to be there to present it so I can paint the picture that I want to paint versus just the raw numbers, which may not show the progress that we were hoping for? It's not that they want to like exclude or lie about anything. It's more that they think that sometimes it lacks context. And then they get worried that there's going to be impressions that are made without the context that they think is going to be there.
Okay, got it. So they're really more concerned about sharing.
Yes.
And maybe the numbers getting released to the public or to competitors or
I don't know about to
something.
The public, just more they're getting talked about internally at a fund necessarily without understanding, hey, this is why this happened last quarter and this is the things we're working towards. But I guess it just points to, being super communicative with your LPs or with your GPs overall.
Right.
Yeah. Same thing that you would have done with your LP relationship from the GP side.
Yeah. Okay. That makes sense. That's interesting.
Yeah. It's like, and maybe also some of these founders were not pressed for updates in the same way when everything was up and to the right. And now
for sure,
updates are being requested with more alacrity than they were before. Okay, so obviously the CFO plays this critical role in an emerging fund manager's life. How do they go about finding one? Either probably starting with a fractional or outsourced CFO.
I feel like there has been an emergence of a lot of either companies starting these fractional CFO services out there. And certainly there's a lot of individuals that are now doing the fractional CFO work. I think you could start with your fund admin.
Yep.
I'm sure that they have a list of people that you can talk to, fellow GPs, and your accountants are also fund formation attorneys. Keep a list of who's out there doing the work and that kind of thing.
And you usually, I would imagine when you're starting the fund, who's the first outside person that you bring in? Is it the attorney usually who's the first relationship that you build, would you say, as a GP?
Definitely.
Okay. Yeah. And then they can be sort of a gateway to other people.
I think it depends. If you're just starting out and you have the idea, and I'm going to plug Carta here, so I don't know. I should be a Carta salesperson, but I know
we would welcome you if you want. Absolutely.
I know that I know Carta has a startup emerging manager program as an example. I actually vetted it out for a client and spoke to a GP that used it, where you also gave them some boilerplate LPA and other fund formation documents that are necessary. And then a certain number of hours with your legal counsel that use that. And the fee for that was incredibly reasonable.
We agree.
That I thought all emerging managers should really use this product.
Well, thank you.
That should be the first person that, if I was starting a fund, I think that's what I would do, because I think and I love working with all of the other industry fund formation attorneys that are in the Valley. But dang, they're expensive.
Yeah.
I think I should have been a fund formation attorney.
We should have all been attorneys.
When I see those legal fees, I'm like, dang, really? So honestly, yes, fund formation, and just to plug Carta, I do think that's an incredible product. More people should know about that.
I appreciate it. Yeah, we agree. I think it's pretty awesome. We do see that emerging managers, maybe just to end on this note of optimism, because we were talking about it before we turned on the mics. You just mentioned that you're pretty bullish on more emerging managers coming in and founding funds lately. What's sort of giving you that sense of optimism?
I have heard of more and more emerging managers. There was a diverse emerging manager conference not too long ago, I think a couple weeks ago. And I think I think that there's just a lot of optimism out there, and venture especially. And I think if you're have a specific investment thesis that maybe somebody else isn't doing, or you think they aren't doing, and you have come out of maybe a larger VC and want to spun out of there and do your own and have track record. So I am seeing some.
Do you think it's easier for folks who are, as you mentioned, spinning out of a larger VC than if you're trying to get into venture for the first time?
I think either you have to have been at a portfolio company that's pretty well known, or spun out of a larger firm in order to be somewhat successful in raising a fund.
Okay. So those are the two main pathways. Operator.
Oh, I don't know.
Future VC.
I can't say, but I think so.
But based on your experience, you would say that those are the ones that sort of stand out a lot of the time.
Yes.
Okay. Well, here's to more emerging managers. We sorely need them. So
definitely
wanted to double back to something that you said earlier in the conversation, which was one of the ways that you want to spend more time being analytical or useful to the GP as opposed to busy work. What are some examples of like analytical or useful tasks that you'd rather be doing than the paperwork all the time?
Some tax strategies for the GP and the management company. How can we save taxes? What could we be doing better in the management company to elevate the firm, get the firm more noticed? Are there marketing strategies we can use? Looking at the current portfolio, should we be doubling down based on our reserve strategy? Are there some secondary opportunities out there that we could sell some of our shares and return liquidity to our investors, or recycle some of that money back into the fund to make new investments? Can I be helpful to a portfolio company? Is there a portfolio company that might need some CFO work that I could give some of my time to them versus chasing down late capital calls or reviewing K1s? We still have to review the K1s, but maybe less so, or some of that busy work. So I think, or maybe strategically help with fundraising. Is there some other investors we should be talking to that I could help knock on their door, or what could we be doing better in that sense?
So it sounds like there are just a myriad of tasks where you could be more elevated to this thought partner with the GP about how do we structure this business, this management company in the right way. And it applies to everything from liquidity to original fundraising to underlying portcos. And the thing that's holding you back a little bit is just all of the other sort of regulated, mandated tasks that you have to do.
Yes.
Okay.
Well, along with also, there's also some new compliance that's come down that funds need to do. And it doesn't apply to all of the funds, but there's a beneficial owner form that needs to be filled. There's California passed one where you have to report on diversity of your portfolio companies. So I think you have to pay attention to those things before, because those are deadlines that you have to meet. So just alleviating some of that, or making it easier, streamlined, or
Fascinating. Okay. Well, hopefully we can help you elevate yourself into doing more of the work that you actually love to do. So
thank you.
That's great. Marie, thank you so much for joining us here. It's been an awesome conversation.
Peter, thank you for having me. This has been great. Thank
Awesome.
you so much.
Can't wait to do it again soon.
Okay.
Cheers.